Hi, it's Jeffrey Cohen. Good morning. How are you? It is 9:40 Chicago time, 10:40 East Coast time. Market's been open a little while, and about an hour and 10 minutes. What's interesting is the market isn't doing what I think most people thought it would do. So it's Friday. It's a big Friday, right? Like it's an important day. It's December 9th. Lots of stuff going on. Next week, the Federal Open Market Committee meets on Tuesday, Wednesday to talk about what they're going to do with inflation and what they're going to do with money supply and quantitative tightening and policy rates and all that. And they're going to release their information. And I think what's happening now is positioning for that meeting. So the market did a few kind of crazy things. By the way, go ahead and ask me anything. Just drop it in the chat. I've got the chat open. I think it's great. If you, I'm going to pop it out. There it is. So just go ahead and ask me anything. If you want me to look at a stock or talk about something macro, I'd be glad to do it. Not a big deal. So again, go ahead and ask me anything. So I'm just going to do some work. And we'll just see how it goes. I love this. So you can see how somebody who runs money and who thinks about stocks all day and bonds, and not so much on commodities anymore. I used to. I'm less on the commodities now. It's mostly about debt and equities, U.S., and honestly, I really struggle with what's going on. So we are fully invested personally in the market, very little cash, but God, I don't think we've made a trade in a few weeks, so we're just kind of riding it out. So this isn't like a pump and dump where I'm trying to move things. This is more just curiosity. Like, where are we? What's going on? So this morning, it looked like the markets were going to go higher, and they didn't. What happened was they sure looked good. Let's pop this up. This is the S&P 500. This is a pretty big index. I'm looking. The stocks that we have generally are down and painful. Painful right now. Not good. That's okay. We look at the S&P 500 though, and you think, all right, how we doing? So S&P 500, right? Like a really big deal. Like this is something we should be looking at. It's in a downward slope, which kind of makes sense, right? We're supposed to be in a bear market, but I don't know. It's hard to know. I could probably draw this better too. A little more professional to connect the tops, right? So you look at it, and it's a pretty good slope down. I don't know what it means though, right? I mean, it's just going to keep falling, right? So what's hilarious is that if you look at the market, we just posted a forecast that said it's going to be here. It's going to be where it was last mid-April in 12 and a half months from now. That doesn't sound that controversial, right? Basically, it's an 11.1% increase in the price of stocks. And they're going to have paid 1.4% dividend. That's not crazy. That doesn't feel crazy to me. 4,400 and a 1.4% dividend. So, but what is crazy? What is crazy is what that means. So, if you want to make a lot of money in the stock market, risk-free. Now, there's no such thing as risk-free money in the stock market, but just trust me, right? We do a fund, and we got all this process, and we believe we've got an angle, right? And so if you were to trade this angle, I'm just going to do the S&P 500 thingy. Those of you who follow the show know that I'm going to move this. I've got to finish working on the spreadsheet. I may take a few minutes while we're recording and just do our fund accounting work. That's so exciting. Oh my God. I'm just like, I'm head over heels. Totally excited about fund accounting. I just want to vomit. Basically, I hate fund accounting. And do you know, it takes me days and days because I try to tell a story. You know, like here's the hypothesis, and then here's the results, and here's the data, and here's the implications, and oh, it's so difficult. It takes a lot of work. I used to work for McKinsey. I used to do this in my sleep. I'd handwrite the charts and fax them to India, and then they'd come back beautiful PowerPoint charts. And we'd meet with clients, and they'd be like, "Oh, it was like you were working all night on this stuff." But now I don't work all night. My wife comes home, we make dinner, we hang out with my daughter, we play video games. It's like we have a nice life, right? I love being married, by the way. I love being married. I love having a nice life at home. I do. It's nice. I really like it. And for those maybe who haven't found the one they love, or they're in the wrong marriage or wrong relationship, if it can happen to me, and I am like, it's hard to imagine. It can happen to me, it can happen to you. I was the last person I ever thought would find love, and in fact, I found a lot of love, and it's beautiful. So I just want you to know that, because that's awesome. That doesn't happen all the time. So the S&P 500, though, if you look, it's not moving. Pretty flat, right? And I guess that's good, right? So it popped up 12.1. It was down around Thanksgiving. Like it had kind of fallen. Like we had some issues around Thanksgiving, and I don't really know what the issues are. So if we look at the more dramatic pose by a FinViz, you can see that the market is in a tight trading range with a fight. The straight line is where the market opened. Where it closed last night, so where it should have opened, right? Like that's the last price, and so, it's a tight battle. But so here's the first thing I don't understand: if the S&P 500 is in a tight battle, and maybe it's happening, the big stocks in the heat map should be mixed, and so what we see is Tesla's up almost 4%. Communication services are up, aerospace and defense. But in general, things are either flat or down. Energy's down, but energy isn't that big anymore. From the looks of this chart, consumer cyclical bigger than energy, communications services bigger than energy. So the next time you think about filling up your tank, instead think about how much time you spend on your phone. And the economy is bigger, the market cap is bigger for companies that manage what you see on your phone than what you put in your gas tank or your heater. It's an interesting fact. I don't understand it, but it's cool. And tech is just enormous. Giant tech is bigger than banking and financial services. So, but it's not, I don't see a lot of direction here. It wants to be green. It's today, you know. It wants to be green. Let's look for the week. Sometimes you need to look for a few days. Look at it for the week. Banking down, tech down, comms down, cyclicals down, defensives are down. Just all consumers pretty much down, with the exception of household and personal products, package. So the stuff you buy in a grocery store, it's because they figured out. I remember talking about this over a year ago with Kimberly Clark. They figured out that you could just raise prices. Hey, look, inflation hit. Don't tell anyone. We're just going to raise prices. Do you know, I went to the grocery store and cereal was $7 for a box. It used to be you got 24 ounces in a box. Now you get 18. And the price used to be $4. Now it's $7. For 18 ounces. That's a pound. That's $6 a pound for cereal. Okay, no, not helpful, right? So they figured it out. Procter & Gamble, Kellogg's, Hormel chili. I bet you Hormel chili went up. I don't know. I don't eat chili, but I don't eat canned chili. We actually make chili. We like to make chili on the weekends, and then we have it for Monday. That's actually a thing we do now. All right, so it's a week. And in a week, you see banking is collapsed. Look at that. Banks are not doing well this week. Now let's go for the month. But for the month, this is weird. So for the day, you're mixed. For the week, you're mostly red. For the month, you're bright green except for energy and large diversified banks and some specialized like finance companies. We look for the quarter, 3 months, not the quarter, but the 3 months. And you see it's Tesla and Amazon and Google and Meta. So there's been a like a rebellion, like a court rebellion, House rebellion against big tech. Big banks, but healthcare doing great. Healthcare loving it. Energy's up. So for 3 months. So I don't know. You can't really trade this. 6 months. We're more mixed, but still you can see the big tech are down. And for 1 year performance, it's like the North and the South, right? So big tech is down half. I just want you to think about that. When you go out and you race to buy Tesla, General Motors is down and Ford is down almost as much as Tesla. Entertainment, communications, all tech is down. So energy's up. There's a guy who tweets, Tao Banker. Tao Banker. I'll find him. Here it is. We follow each other. Good guy. I'm looking for his information and I can't see it. Nope. Maybe. There it is. He's not clear. I thought I saw something in his tweets, but he may have deleted it. So that's fine. Point is, if you look over a year, tech is down. Tech was overpriced by 50%, by 100%, like double the price. Big banks were overpriced. And why were big banks overpriced? Because interest rates were so low. They pumped a lot of money into low yielding. And when the price of bonds went down because the interest rates went up, boom. You look at SIVB, that's one of our favorites to follow. It's not a stock we hold, but it's a favorite to follow. They're the bank for private equity and venture cap companies. And they're down significantly, 70% for the year. And so, but I got to tell you, that is a great niche play when the market turns around, right? But as long as tech is bad, niche lenders to new tech is really bad. So, okay, so that's where we are. Was there any news today of any interest? I didn't see any before. I did read the PPI. I'm going to show you PPI data, but Microsoft's going to buy something else. Luminicity. I don't even know what that is. Housing market is collapsing. Okay. Terrible year for bonds. Oof. Why don't you state the obvious? Interest rates go up, bonds go down. Oh. Inflation expectations fall to the lowest. So it means people believe that inflation is going to be wrestled to the ground. Oh my God, Credit Suisse is now a buy at Bank of America. So think about it. Merrill Lynch, the thundering herd, is telling people to buy Credit Suisse. It's a very sophisticated gamble to buy Credit Suisse. And so when I hear this now, I don't know what to do. It would be like you go to the Ford dealership and you're going to buy a Mustang. And you like Mustangs. You've owned them for years. And this one's going to have a V6, because energy efficiency. Probably like 180 to 220 horsepower. Probably a straight line 6. It's not going to go very fast, but it looks great. Okay. And they're going to tell you to reenact the Evel Knievel jump over like a tractor trailer. Or to go racing in the streets of Chicago off of 94 and 41 at 125 miles an hour to race the Lamborghinis and Porsches and AMGs that race all the time by my house. No, it's a Mustang for show, not for go. And so when Bank of America says Credit Suisse is a buy, I question the quality of the investment advice. So there, I found something to talk about. By the way, did anyone send a chat? Any chats? Come on, you guys gotta chat me up. AMA, baby. AMA. Come on now. There's like 9,000 of you people out there. One of you's got something to ask. Don't you? Do you? Please, ask me a question. Or I'm going to start making up questions, right? So Credit Suisse, let's look at the monthly chart over the maximum time frame. So if you like Credit Suisse, it was $20 a share in 1995. It was $20 a share in 2003. It was $20 a share in 2009. It was $20 a share in 2012. 2016, 2018. Who knows? Maybe it comes back to 20. But right now, it's $3.42. They're restructuring. This is a stock, this is a company that most likely was fighting a bankruptcy risk. And you have Bank of America saying, buy it. It's only down 85% from its long-term support and resistance level. Down 85%. So do you think when they meet like a widow and an orphan or somebody and say, look, we're going to put a fund together for you. We're going to put a plan together for you. I'd like you to put a lot of money into Credit Suisse. We got to buy on it. We think it's great. By the way, we're probably some of the people that bought the stock to help refinance at $3, but we'd be happy to sell it to you at $6. So we're going to pump the price up so we could double our money. I don't know. It's a very sophisticated trade. And so I will say this, though. If you're a bottom feeder, yeah, this thing's falling like crazy, right? But there's a saying, don't catch a falling knife. And to be honest, I don't know if Credit Suisse is a good buy or not. You know, I bet you Bank of America is going to say the same thing about Party City. Look at Party City, same chart. The line is actually from, I think, from Credit Suisse. But let's fix the line. This is probably a better time frame. So here, Jeff, should I buy the stock or not? Oh yeah. For a penny. I don't know. What's it going to be priced at? I don't know if Party City's even a thing anymore, right? So there's a lot of these stocks that are like the Walking Dead. They're zombies. They have a lot of debt. They can't afford to pay the debt. Cost of operations is up. Wages are up. Who knows if the market has moved beyond them? And so they're just crapped out. I don't know. I wouldn't touch it with a 10-foot pole, but I like it. Now, another one of those is Corbis. Corbis is another one of those sophisticated bets. Who knows what's going to happen? Now, we own Corbis, so every once in a while we're going to look at that ticker because that's important to us. Oh, look, the markets have popped higher. Tesla's up. NVIDIA, Broadcom, Disney, Comcast. Okay. That's nice. That's pretty sexy there. So stocks are up. So here's what I think. I think that plays are being made for the inflation and FOMC meeting that's going to happen on Wednesday. People want to have their trades in now. They want to kind of enter the weekend feeling like they're well positioned. So they're selling energy, selling healthcare, selling retail. That's okay. Hang on a second. Let's look at this. Yeah, they're selling retail, selling energy, buying risk. Comcast, Tesla, NVIDIA, Broadcom. Okay. It's an interesting set of bets. I have a hypothesis. Coinbase. Nope, that's down 5%. Coinbase is another one that's just really at risk here. Look at that. It tried to pop higher. Kind of reminds me of Corbis. Nope. Coinbase is in the toilet. So, yeah, I don't know. Interestingly, we don't know what's going to happen, right? So, good news is we're doing a live stream. You can follow along with us. Maybe we'll do a little tweeting. You can see how a professional money manager tweets. By the way, I do love that picture. Please help us. We need safe banking. I don't know. I don't think so. So there's nothing here I even want to see. All right. Do we have anyone dropping us a comment? Come on, give us a chat, guys. I love it. I want to hear all your questions. Instead, I got no questions. Whoa. That's heavy, man. That's heavy duty. I may have to go back and look at that again. There's nothing going on. There's nothing going on. I can't stand it. Why don't you just bore me to death with this stupid market? Have some coffee. Do something. Give me something. You know, one stock we actually shorted and made money on and we weren't happy about was HNRG. Got Credit Suisse. I don't care about Powell at Brookings Institute. There's really nothing going on. Maybe we got to go back and look at stocks some more. So let's go to Finance Home. So interesting. The market's up 1/4%, 0.5%. It's down 0.5%. Let's take a quick look at CoiFin. That's always a really nice. So this is one of those sites that you should probably look at. If you're retail, you're a regular guy, you don't have a Bloomberg terminal. We don't have a Bloomberg. You know, I wrote it down. Sal wants to sell me a Bloomberg terminal access. $2,305 every month. Oh, mother of pearl. Ah. You know what I said? So call me next month. Maybe. It's a lot of money. VIX is up slightly. Not much. Here's the stocks over the year. I mean, you're down. Remember we looked? 3 months. They're a little mixed, but not much. Not much movement. 1 month, stocks are up. Looking good. 5 days. Here's what you're going to see. They came down one day. Where are we? Well, they look like they're all trying to come up, but with a different profile. So if you start them all at the same percentage, right? The NASDAQ is really trying. Half the gains in the S&P. The industrial is pretty flat. And then IWM, or the Russell 2000. So here's the story, is down. So small caps are down. Large caps are up. People want to be liquid going into next week. Federal Open Market Committee. People want to be liquid. They want to be in comms. They want to be in real estate. They want to be in tech. They don't want to be in energy, and they don't want to be in healthcare because they're afraid in consumer staples. This could be a discussion of recession. Recession. By the way, Jeffrey, what is a recession? What is a recession? Investopedia. What is a recession? A significant, widespread, and prolonged downturn in economic activity. Okay. So why would I look at CoiFin and think that this is a recession play? What made me say that? That's a good question. So now I'm going to tell you what I'm really thinking. This is probably the best part of the whole video. Quick, start recording. Oh, wait. I'm actually live streaming, so you guys can see this. That's helpful. So why do we think recession trade? So in a recession, people lose their jobs. They stop driving to work. People buy less things. So there's less trucking and transport and logistics. And then the retailers start to lay people off. And then the profits go down. Now there's another part of it. So we talked about the energy. We talked about consumer staples. I have no idea why healthcare is going down. Now maybe, so the best part of healthcare is when you have private insurance and you go to the doctor or the hospital with your private insurance and they charge a lot of money. But if you have state insurance, if you have like insurance that is paid for by the state, Medicare, Medicaid, I believe the prices paid are much lower because they're negotiated federally. So healthcare does well when people have private insurance, and they can even do like discretionary things to get their lips done, to get their bellies tucked in. They have an issue with like a skin thing, and they can get that taken care of, and whatever, right? They like whatever hurts. Oh, my arm hurts. Let's go to the Pain Institute, right? But when you have government insurance, you break a bone, you go take care of it. You have cancer, right? Stops you from dying. But you're not going for anything discretionary. So, I think that hurts here. Healthcare. Now, on the upside, communications. It's a flight to safety. When the markets are down, right, jump to comms. Jump to Verizon, right? Oh, real estate. I have no idea why real estate's going up. That is so weird to me. Tech. I got it. So tech does well. So this is a bet on interest rates dropping. Are interest rates dropping, Jeffrey? Jeffrey, are interest rates dropping? Let's take a look. Markets, bond rates. No, they're going up. These are yields. Yields at the short end, yields at the long end. Yields are going up. So Jeffrey, we're betting on interest rates falling. Because if interest rates fall, tech does well. Tech generally doesn't make a profit. It's a growth thing. Grow, grow, grow. And when interest rates are high, future growth is discounted more. When taxes are higher, interest rates are valued less. When taxes are higher, future earnings are worth less. So in the future, so if you believe that interest rates are going down and taxes are going down, then tech, sexy. If interest rates go up, taxes go up, tech, you're betting on a future. That's like biotech. I bet you biotech is in the shitter right now. Let's take a look. Let's take a look at and biotech. XBI is the most risky small biotechs. It's down today 1%. It was up. So there was a big bet when the Fed started flooding the market with liquidity. Biotech went up. And then when they pulled back on the liquidity, biotech went down. So, information tech, biotech, growth. So interesting, though, that today, tech is up slightly. So we'll see, because biotech's not up. This must be something very specific to tech, IT tech. So that's fine. So that's where we are in the markets, right? So if you're going to make bets, banking probably doesn't seem like a good place to be, although banking is flat. It's up 0.1%. So, all right, so while we're watching, the Russell's still down 0.5%. The S&P 500 is still flat. I do believe that large cap is up because people are making bets. They're repositioning their portfolio into highly liquid stocks that they could get out of at a moment's notice. That's my call on the whole day. So go back to sleep, Jeffrey. Who gives a shit? Whatever. No one cares about this. And Twitter is like stupid right now. There's just no... You know, I was following this morning and my feed, it's terrible. There's nothing... Minoritized students? I'm sorry, unfollow. You're stupid. There's nothing here. There's some fat guy in a... It's actually very funny. Oh. Oh, boy. Somebody took out a shopping mall. So nothing works here. Twitter's dead. Facebook, LinkedIn, they're both dead too. Let's get rid of those. There's this crap. Bunch of posers posing for pictures. I used to work with some of those people. Posers posing for pictures. All right, so where are we at? Maybe we have to go back and do this the old-fashioned way. Some of you guys may remember from my old videos, right? I had a whole list of industries that we followed. And so we're going to look at the summary. So this is the US dollar, flat. Interest rates, up. Banks, down. Bonds at the long end are down, at the short end are up, which is interesting. People there's a flight to quality in short duration U.S. Treasuries. Even though the rates are slightly higher, people want to be in those bonds. That's interesting. A lot of banks down. These are the most valuable banks, the most expensive, the highest valuations. Love those. Let's look at oil. How's energy look? That's pretty red for energy. Now there's a stock I like at the very bottom. Maybe someday we'll get back into that trade. I like that trade. Let's look at money managers. About half and half, 60-40 down, 60-40 red. Coal, red. Crypto and miners. So physical, make shit, dig shit out of the ground and make it, up. That's not a recession trade. People buy Cleveland Cliffs because they think people are going to buy more cars, not less. Now, Bitcoin, crypto, all that stuff is down. Oh my God, I redid these. Tiny valuations. It's crazy. All right. Cannabis and tobacco. By the way, we have been smoke-free, not one puff of anything. Smoke-free since 2018. I'm very proud of that fact. It doesn't matter how many times I've wanted a cigarette, I Haven't had one. Not a puff. But that doesn't stop me from tracking tobacco and cannabis stocks, because I do think there's a play here eventually. Chips and semiconductors, mixed. Trucking and transport, negative, very negative. B2B and B2C tech, real tech, like DXC, Accenture, Kyndryl, Wipro, Cognizant. Mixed, flat, flattish. Quantum computing companies, not bad. Up a little. So there's no pattern, right? This is like so interesting. This is just a random day. Random day. Let's look at the saved. So I should be doing work on a spreadsheet right now. So instead, this is what I end up doing for most of my day as I look at stocks and I look for patterns. And I got to tell you, I don't make any money doing this until I find that trade, that one trade that I want to make. And then boom, I make or lose a killing. Maybe I should buy more Corbis. Oh, that'd be great. Terrific. There's no strength in this stock. Get this for the year. It's so sad. I just want to cry every time I think about having Corbis. Cullen Frost, same thing. Flat, down. Flat, up. So the 140 mark is the core mark of this stock. So if it falls much below 140, then it goes to 120. I don't know. I have no idea what's going to happen, but the chart tells me it could pop back to 160. It could pop down to 120. It probably doesn't stay at 140 forever. Corbis probably just goes to zero. Coinbase, on the other hand, that thing could pop. That's interesting. So, what do we have here that's up? We have a bunch of stocks I never heard of. DocuSign. I don't know. Dunkashine. There's a song. Dunkashine. Dunkashine. It's German, I think. Oh, lots of stocks down. Like 10. 9 stocks down. Lululemon. Or as I like to say, Lululemon. Lemon. They make the tight pants. Love that. Gotta tell you a story. You're gonna love this. So, my wife and I are going to the club every week. We are like religious. We're going 3-4 times a week, right? I haven't been this fit in years. I look great, right? And so I buy a pair of yoga pants, the stretchy, tight kind. And I'm doing yoga. Like twice a week. My wife's in the room, I'm in the room, and there's like 25 other people. And I gotta tell you, there's something to be said about a tight pair of yoga pants. There is. It's nice. I understand why women wear them. You just want to show it all off, right? People can see every curve. Just saying. It's a little extreme. Being a man in a room with about 24 other women, and you're doing your yoga stretches, and all of a sudden you see the eyes, and they're like darting away when you look. Ooh, what were they looking at? Yeah, I get it. But I understand that LULU might have built a little inventory. They're stretching their financial position by buying more stretchy clothing. I don't know what they were thinking of, right? Oh, and at the same time, you have Torrid Holdings, Curve. So Lulu shows the curves. Torrid is also made for curves. So maybe there's a flight to something here. I don't know. Maybe it's the market curves. That's all about today. I love it. I'm trying to figure shit out. It's like, I don't understand. So that's good though. I think about that. Market's still flat. Looks like it tried to pop up. It's coming back down. Nothing's really moving, right? It's a big week next week. Corbis decided to shave a little haircut off my net worth. Colin Frost is down 50 cents. Biotech is in the crapper, down 1%. And interest rates are still rising today. So, what else do we have? I can't spend the entire day looking at this shit. You go blind. It's like masturbating. You can't look at the stock market all day and think you're not going to go blind. You're going to go blind. Stop it, Jeffrey. Stop looking. I'm like, I can't look away. There's all these stocks to look at. Okay. We're going to take a look at the producer price index that came out today. So what I'm seeing here is goods went up 0.1%. Manufactured product. We heard this from Chair Powell at the Brookings Institute about a week ago. He said they're looking at 3 different types of inflation drivers. We're looking at services, we're looking at product, and we're looking at wages and job market. And so you can see services up 0.4%. Goods up 0.1%. Nothing about jobs. Core, so final product and services, less trade services, food and energy, is up 0.3%. So core is up 0.3% after being up 0.2% in February. Core is up 5%. So what's interesting is this is exactly the same number as Chair Powell talked about at the Brookings Institute. He said we're seeing core CPI, which is consumer view, buyer's view of inflation, is up 0.5 core. 5%. 6% if it's core plus energy plus food plus whatever, right? Now, look at it from the producer side. The producer sees inflation of 5%. Core. 7.4%. 7.4% not core. Everything. So in fact, the producer is seeing more inflation than the consumer. Now, it either reflects two things. One, that the producer are being good guys and they're sucking it up and they're taking a 1.4% loss. Could be that. I'd like to believe that. Do you believe it? I like to believe that companies that make stuff and make services for your benefit are going to lose profit. Sure they are. Sure. Why not? For the good of mankind, I'm not going to raise prices. I don't think so. I think that what happens is either this is a lagging indicator or the consumer one's a lagging indicator. So it's possible that prices will rise another 1.4% back to 7.4, or it's possible that this is the lagging and that this will actually turn into 6% eventually. So I don't know, right? Consumer at 6, producer at 7.4. Does it come down or does consumer go up? I don't know, right? But that's good to know that this is a question, right? The index for final demand services increased 0.4% in November. So it's up a lot. It was only up 0.1% in October. Margins for final demand trade services rose 0.7%. Prices for final demand transportation and warehousing declined 0.9%. Okay, doesn't really tell me anything, but it's interesting. Prices for financial services jumped 11%. Machinery, vehicle wholesaling, loan services, fuel, lubricants, portfolio management, and long-distance motor carrying also moved higher. But transportation of passengers fell 5.6%. Automobile and auto parts also fell. The November advance in final demand was led by a 38% jump in the index for fresh and dry vegetables. Chicken, eggs, meats, canned, cooked, smoked, or prepared poultry, and tobacco products also higher. Gasoline fell 0.6. So to me, this is a really big number. Where do I see this in the details? Final demand goods. This is in a month. This isn't in a year. This is in a month. That can't be. That can't be. Product detail. The index for natural gas dropped 15.8%. Crude and other oils, corn, hay, whatever. The index for fresh vegetables jumped 43.1%. So here's a question. Who makes money and who loses money when fresh vegetables change? I don't think anyone's looking at this. Fresh vegetables, fresh and dry vegetables. Fresh vegetables, fresh and dry vegetables. Shocking rise. Shocking rise. Of around 40%. Let's throw the link out there. People like the link so they can see for themselves. Here's one quote. I don't know what the difference is. Final demand goods. Unprocessed goods for intermediate demand. Oh shit. That means they're going higher. So this is final demand. Okay. That's the tweet. There's no key takeaway. But that's super interesting. That is super interesting. That's the insight. That's it. That's it. No one gives a shit. I love it. No. All right. Where? There it is. Here we go. The average savings account in the U.S. is an interest rate. I love it. I just posted a very aggressive tweet. Oh, kicked a little butt there. Kicked a little butt there. Oh, yeah. Love it. Somebody just dissed me. Who is Charles Black? I don't know who that is, but that's okay. If people want to spread the word about my services, then I am very happy. I don't understand. All right, so I can't get over that. This is actually not relevant, but it's funny. I can't get over this. All right, I gotta look. All right, I have no idea what that's all about, but that just got total clickbait. Total clickbait. Clickbait isn't relevant, but it worked. And this is just stupid. That's just stupid. All right. That was interesting. Excuse me. All right. So interesting. This is a good data point. Banking holding companies. All right. That's a good data point. FDIC, producer price index. Oh, yeah. So what else do we want to look at here? So when we look at if the market's going up, these are the expected return multiples. Here's your spider. Here's your beta. Here's your variance. Yeah, those are exceptionally high variances and exceptionally high. They're down in price a lot. That's interesting. So the top two stocks are down 44% and they're down 63%. Coinbase is bleeding $1.8 billion in cash, but Digital Turbine's making cash. $140 million on a $1.6 billion market cap. They got a little bit of net income. They've got some debt. Not too bad. This one's interesting. 3 times equity. This one's only trading at like 1.5 times equity, so they must have done a big raise, Coinbase. So the question is, can Coinbase stop the blood flow? The cash flow from operations negative. Neither of them are much impacted by AOC. Well, one is actually. Why would the AOCI be negative on that one so high? Net income of $35 million, they lost more in AOCI. So those two are in trouble. But now, NVIDIA. So you have to look. You have to look. It's interesting that this is the stuff that your model has to look, that your model ends up recommending when you suggest that equities are going up. If you think equities are going up, you have to be in stocks like the Carlyle Group, Blackstone, semiconductors, AMD, SI Time. You have to be in the risky stuff if you think stocks are going up, because that's where the action is. Mercado Libre, NVIDIA, right? If you think stocks are going up, you don't want to be in some of these weird stocks. Funco, Peabody Energy, RIRCM, Unisys. It kind of makes sense. You don't want to be in Unisys. God, that's awful. Yeah, that's what this is saying. So, I like it. It just makes me uncomfortable, right? Because now I'm not sure. Right? Like, if you think the stock market's going up, these are the stocks that you should be in, hedged against S&P 500 risk. Let's see what else we get here. You can get most of your benefit from 4 stocks. 002227. Wow. Holy crap, it wants you to really risk it all. That's what the model says. If the market's going up, you need to be in high risk garbage, basically. Ugh. I don't know if I can do this. But this is what it says. And so that is so interesting. It's uncomfortable, though. It is an uncomfortable situation, and I don't know what to do. So let's look at down stocks. Maybe the down stocks have something that I'm supposed to figure out. Still got your biotechs. Didn't really change. Did I change it? That's the question. Here it is. It didn't change. So I did not change the market return of the down run. So I will have to do that tonight. So this is still at 9% expected return of the market. So at a 9% expected return of the market, you see a lot of biotech crap. That's fine. So that's not relevant at the moment. So it's really about putting yourself out there. 9%. No, I'm looking at the wrong stuff. Come on. Well, so by the way, just ignore everything I just told you because that was all the wrong stuff. God, that's so frustrating. All right, let's try this again. Let's look at the down run. Let's look at the up run based on the S&P 500. Oh, that one was updated. All right, fine. That one was updated. Let's look at this. Let's make sure. Yeah, this is fixed. All right. So the down run, I knew it was off. Look at the same crap biotech, except Gatto and F45 Trading Holdings and Bed Bath & Beyond, they're still up there. Desktop Metal. Looks like it didn't really change. All right. The up run changed. That's really where we're at here, is we're in a situation where what we'll do is we'll do some testing. We'll do some looks at those. But that's odd to me, right? All right, what else? Oh, gotta go. Hang on, I'll be right there. Later, everyone. By the way, we're not paid to make the videos. Hit subscribe, retweet, drop a comment. Thanks so much. Good luck in the markets.